Hello, very good morning to all and welcome to a brand new week ahead. I'm Kelvin here. I hope that you all have a great and restful weekend. Very good morning. Today will be the Monday, the 28th of October 2024. And welcome to today's Daily Dose of Market Insights, US Special Election Edition. So before we start our Daily Dose of Market Insights, as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, the first we call it agenda, or the first pointer of our daily dose is to cover a recap what has taken shape on Friday and especially on the weekend that could actually impact and as well has already impacted on the intraday broad-based cross-asset classes performance. Then we follow by a short snippet about the US presidential election insights that I share with you all that particularly could also impact one of the broad-based cross-asset classes as well. And we round up with what are the current short-term technical outlook on the broad-based cross-asset classes, together with what are today's key event to look out for that could potentially impact the movement of these broad-based cross-asset classes as well. So let us kickstart what has taken shape on Friday first. All right. So on Friday, let's have a quick look at what happened on the major US stock indices performance. So this performance was rather a whipsaw performance, rather lackluster. We see the S&P 500 inching up a fresh intraday high on last Friday, but however, the so-called bullish momentum on last Friday failed to actually have a positive follow through in the rest of the US session, and we see selling off throughout the US session and ended at the low on last Friday. Very similar on the Nasdaq 100 as well, despite the fact that the Nasdaq 100 managed to close positive at 0.59%. If you look at the intraday performance, same thing as well. Push up at the start of the first hour of the US session, then thereafter we see an intraday sell off and it closed near the low of last Friday US session. So then overall what we could see is that on last Friday, I would say that the performance was not so great on the major US stock indices, but that was also kind of being expected. Why? Like I shared with you all in 3 of my daily dose on last week, there's this risk of this VIX versus move ratio that is inching upwards. So what we could see right now ahead of this US presidential election, later I'll share with you also one of the key metrics or key we call it instrument that is causing this kind of lackluster movement on the US stock market. That means very likely we now start to see two-way volatility move. That means we start to see spike up on the upside, and thereafter we may see spike down on the downside. So very choppy two-way move for the major US stock indices. That is, for in my opinion, roughly will be how this is going to play out throughout this week as we head into the 5th of November polling day as well. And do not forget, this week is so pretty much pivotal. Why? Because this week we start to see 5 mega cap US stocks earnings release. So later I'll touch more about that when I come towards the end of today's daily dose, right? What are the dates to look out for? So SPX almost unchanged, negative 0.3%. The Nasdaq 100, yes, positive 0.59%, but it actually ended the day rather weak. Like I mentioned, push up at the start of last Friday US session, then thereafter you see an intraday sell off and it closed near the session low. And the Dow Jones and the Russell 2000 all ended with losses of negative 0.1%, and the Russell 2000 down negative 0.49%. All right, and one thing I want to share with you is pertaining to the FX market as well. So the FX market, the dollar yen continues to be the very strong outlayer. That means dollar strength against the yen very strongly pushing up. So that was also primarily due to internal political factors in Japan, which I shared with you all on last Friday, due to this risk that the current leadership of this LDP may get eroded, which indeed got eroded on last on yesterday, where we see the results that came in, stating that the LDP coalition led coalition falls short of the required 233 seats that is required for the lower house parliament. That means on yesterday, there was a snap Japan general election, and this outcome of this general election saw the LDP-led coalition fall short of its required 233 seats. That means, i.e., the LDP right now got to do two things. Number one, he got to find other opposition party to form a much more weaker coalition in the lower house in the parliament. When that takes shape, that means LDP got to actually now push out for populistic policy. That means, i.e., they may start to influence the Bank of Japan of beholding their normalization monetary policy. That means, i.e., gradual interest rate cut, gradual interest rate hike next year. That means, don't forget, Bank of Japan wants to embark a gradual interest rate hike policy, but given this political backlash by LDP, they may be now weaker in terms of political power in the parliament. That means, in order to actually rule the lower house or rule Japanese politics right now, they themselves got to seek other coalition partners, and by seeking out other coalition partners, they got to give in to more populistic policy. That means populistic policy as in potentially lower interest rate in Japan again. So that could actually prevent a Bank of Japan indirectly from enacting that gradual interest rate hike that they want to embark on going forward into next year. So that's why the yen weakened pretty much dramatically as we speak right now. All right, so later I'll share with you more on the short-term technical outlook on the Japanese yen. And in terms of the Nikkei 225, because due to this populistic policy, that means that is more pro-growth policy, we see the Nikkei 225 sell off early in the morning, but managed to recover very steeply as we speak right now. So if you look at the Nikkei 225, it's in fact up by 1.45% after, I think, selling off about -2% at the start of today's Japanese session. So later we touch more about the technical outlook on the Nikkei 225 or what are the key levels to look out for. All right, and also over the weekend we see this very surprise minute strike by Israel on Iran. All right, because over the last few weeks there was talk about Israel striking Iran key nuclear facilities, we call it plant, and as well as key oil and gas, we call it supply facilities. So that in turn spoke out the risk of oil prices going much higher towards the $73 per barrel. But instead, Israel's strike on last Saturday, that means, was rather limited. These are also potentially due to this upcoming US presidential election as well, where both parties, I believe that due to winning of their internal votes, kind of persuade Israel to actually embark more on a limited strike at this juncture. So that causes oil price to actually gap down in today's Asia session by -4%. But what interestingly, this gap down managed to hold on our short-term pivotal support that we highlighted on last Friday at around that $68 per barrel on the West Texas crude oil. So later I'll touch more about that when I cover the short-term technical outlook on WTI crude. And with that, that sum up the key data events and as well as news flow that impact the major broad-based cross-asset classes. No, let us now focus our attention to some US presidential insights and how potentially it could influence the respective broad-based cross-asset classes as we go forward, indicate towards the 5th of November polling day. So what we could see over here is that based on the betting markets, this is the live price section from Poly Market. So based on betting odds, Trump is still comfortably leading by more than 60% against Harris. So 61.1% goes to Trump versus 35% goes to Harris based on the betting markets. And based on the betting markets over here is that, like I mentioned earlier last week in some of my daily doses, in this US presidential special edition, we do have 6 to 7 swing states to monitor on, and the key swing state over here is Pennsylvania. Why? Because out of these 6 or 5 swing states over here, Pennsylvania over here has the highest electoral votes weightage, 19 of them out of these 6 swing states, better states. So based on previously compiled statistics, whoever wins Pennsylvania has higher chances of winning the White House. All right, so Trump is still comfortably leading by 62 over 38 from against Harris based on the latest betting markets from poly market, pardon me. So if you look at also the balance of power, yes, because for US there are three branches: White House and Congress, and within Congress we have the Senate and the House of Representatives. So if we were to look at the at the moment in time, is still about the presidency goes to the Republican, 66% chance. The Senate, high odds of 84% swing to the Republican, but the House right now is 50-50. Okay, kind of 50-50, toss up 52% Republican. All right, so this is the betting market. So if you look at the current betting market situation over here, given that it's highly skewed towards Trump, so there's this Trump trade seems to be getting in front of the forefront, that is pushing the US 10-year Treasury yield on the upside. So if you look at why, because Trump policy is potentially inflationary in nature due to his very aggressive corporate tax cuts that could actually widen the US budget deficit, and also his preference of getting higher trade tariffs targeting to China and as well as against the rest of the world. That means higher 60% tariffs on China products going to the US and additional 10 to 20% tariffs on the rest of the world products going into US. So that's actually medium term to long term inflationary in nature. So that causes the US 10-year Treasury yield to continues to push up much higher above the 200-day move average in the last three sessions. Okay, since Wednesday, Thursday, and as well as Friday. Okay, very clearly 3-day of close, 4-day of closing higher above the 200-day moving average. So now looking to actually test that 4.40 key major resistance on the US 10-year Treasury yield, which is this descending trend line that is in place since 23rd of October last year. So a breakout above this level potentially may see us revisiting the swing high of 16th of April and 30th of April this year, which is at 4.7%, then followed by the key long-term pivotal resistance at the 5%/5.20%. So this push up in the long-term US Treasury yield, that means which is the 10-year US Treasury yield, is adding on upside pressure on the US dollar in general. Why? If you look at this movement of the US 10-year Treasury yield, this push up and a break above the 200-day moving average at the start of last week, since the low of 16th of September, is actually moving pretty much in line with the US dollar index as well. Okay, the US dollar push up from also the end of September, and you look at the last week daily closes, all has been closing above the closing above the 200-day moving average, and now the dollar index is looking to test the major resistance zone of 105.50/106.37, which is also very close in parallel with the major resistance of that 4.4% on the US 10-year Treasury yield. Okay, so i.e. what it means that going forward, if the poly market betting odds continue to skew towards Trump on the high percentage, and together with the key swing state of Pennsylvania that is looking at Trump at the 60% odds and above also, that could add pressure on the US 10-year Treasury yield heading upwards and potentially lead to further potential dollar strength, as well as depicted by the bullish momentum that is being seen on the US dollar index. Okay, this is the daily chart of the US dollar index over here. So i.e. heading into the election day on the 5th of November, we may see this persistence movement of these two movements coming in together. That means push up in US 10-year Treasury yield, leading to a firmer US dollar strength going forward as we head into the 5th of November. Okay, something to take note of, right, in this US presidential election segment for today's daily dose. All right, so with that, now let us now focus our attention to the intraday technical outlook on the major broad-based cross asset classes, starting with the dollar. All right, the FX market first, pardon me, the FX market. All right, so with that, let me expand my screen so that you guys could actually have a better view on the key levels and the chart. Okay, so with that, let me start with the euro dollar. So the euro dollar on last Friday, we do have a short-term intraday bullish bias, looking for it to bounce up to revisit the 200-day moving average that's acting in parallel with this intermediate resistance zone at 1.0870 and 1.090 level. But unfortunately, price action only hit 1.0840 before selling off in the US session on last Friday. So with that, it seems to us that upside momentum has started to be diluted on the intraday basis. And with that dilution of that upside momentum by having this bearish divergence that was being flashed out on the hourly RSI, we will flip to a intraday bearish bias on the euro dollar for today using that 1.0840 in any potential minor bounces. As long as these minor bounces then surpass last Friday's minor swing high at 1.0840, we will actually maintain that we will actually flip to a intraday bearish bias on the euro dollar for it to revisit the medium term pivotal support level at 1.0750. So what's this 1.0750? If you look at the daily chart of the euro dollar over here, okay, is this lower limit of this medium term pivotal zone at 1.080/1.070, which is also confluencing with the lower limit of this major symmetrical triangle range support that is in place since 3rd of October 2023 low. Okay, so that's how I derive the 1.0750 level. However, if price action starts to bounce up and have an hourly close above 1.0840 today, then today's intraday bearish bias will be invalidated on the euro dollar to see a squeeze up for the second leg of the mean reversion rebound taking shape, revisiting 1.0870/1.090 level. All right, so that is the intraday technical outlook on the euro dollar, flipping to a bearish bias below 1.0840. Now, turning our attention will be the sterling dollar. Sterling dollar on last Friday, we will have a neutrality stance between 1.3010 and 1.2930 level. Price action hit almost the 1.30 level mark before shaping a sell off in the US session on last Friday. So given that this inability to clear above 130.10, we'll be using 130.10 today as my short-term pivotal resistance level. Then look at the RSI. The RSI also rather weak as well. No clear signs of upside momentum as price action inched down to form lower low below the 50 level mark and hasn't even hit the oversold region yet on a hourly basis based on the latest observation on the hourly RSI. So with that, using 130.10 as my short-term pivotal resistance for today, flip to a intraday bearish bias on the sterling dollar. First support level to watch will be on on Thursday minor swing low at 1.2907. A breakdown below it exposes 1.2860 followed by 1.28 figure level, which confluence with the 200-day moving average as well, acting as a similar support level at 1.28 figure level. Only a push up with an hourly close above 130.10 will invalidate today's intraday bearish bias to see a mean reversion rebound scenario resurfacing on the sterling dollar to visit the next near-term resistance level at 130.60 followed by 131.07. Okay, so that's for the sterling dollar. Turning our attention will be the Asia Pacific currency, starting with the dollar yen. So dollar yen last Friday, we do have 1.510 as my short-term pivotal support level, flipping to a bullish bias on the dollar yen on last Friday. So no change. Price action continues to print higher high. Yes, RSI is overbought, but there's no clear signs of a bearish divergence yet. So potentially there could be a minor pullback taking shape. So minor pullback. First support level to watch will be a Titan key short-term pivotal support for today, 52.30. So as long as 52.30 holds in this potential minor pullback, which is also the gap up in today's Asia session, the gap up support as well. So Titan, the short-term pivotal support to 52.10, still maintain that intraday bullish bias on the dollar yen. above 53.80 sees 54.70/54.80 next, which is the 2 times Fibo extension, and the 1 time Fibo extension as well, Fibo extension cluster, and the 54.70, 54.80 is also on the daily time frame, a rather key congestion area over here as well, right? Previously, swing low of a 16th of May, 4th of June, breakdown retested on the 30th of July before that previous sell-off take shape. All right, but however, if price action managed to clear above 57.80 on the hourly close above it, potentially it may see a further spike up towards the next resistance level at 56.60, which is the upper limit of this minor ascending channel that is in place since 30th of September, and as well as a couple of Fibo extension cluster as well, 2.618 and 1.236. Only an hourly close below 52.30, a breakdown of the hourly close below the Titan short-term pivotal support for today at 52.30 will invalidate today's intraday bullish bias to kickstart a much more we call it a pronounced minor mean reversion decline scenario to expose the next near-term support at 51.10, which corresponds to the 200-day moving average. Below it says 50.30/148.95, which correspond to the rising 20-day moving average. All right, so that's for the dollar yen. Dollar yen still maintaining that intraday bullish bias with a tightened key short-term pivotal support now at 52.30. All right, now turning our attention will be the Aussie dollar. So Aussie dollar continues to print lower lows, breaking below the 200-day moving average that kind of we expected on last Friday bearish bias scenario, hitting our first support level at 65.95. So with that, no change, still maintaining that intraday bearish outlook on the Aussie dollar for today with a tightened key short-term pivotal support level, with a tightened key short-term pivotal resistance level, pardon me, at 66.20. So use a tightened key short-term pivotal resistance today on the Aussie dollar at 66.20, very close to the 200-day moving average, which was also last Friday minor swing low area on last Thursday, now turns into a pullback resistance, also correspond very closely to last Friday US session minor swing high as well. So as long as this tightened key short-term pivotal resistance is not surpassed on the upside, 66.20, the next near-term support level to watch will be 65.70, which is the minor swing low area of 15th of August and 12th of August. A breakdown below this level exposes the next near-term support zone of 65.20/65.10, which correspond to the 1 time and 2 time Fibo extension cluster level, and as well as this minor congestion area of 7th of August and 8th of August over here. Only a push up with an hourly close above 66.20 will negate today's intraday bearish bias. So I repeat again, a push up with an hourly close above 66.20, short-term tighten pivotal resistance will negate today's bearish bias to see a potential mean reversion rebound taking shape in first step towards the next near-term resistance level at 66.60. A push above it says 66.90 next, which is the minor swing high area of 22nd of August and 23rd of August. Right, so that is the intraday technical outlook on the Aussie dollar, still keeping that intraday bearish bias with a tightened key short-term pivotal resistance at 66.20 for today. Now, with that, that sum up the intraday technical outlook on the major FX dollar pair. And with that, I have one particular FX cross pair to share with you all, will be Aussie Swiss, also taking into account of the Aussie dollar weakness as well. So with that, the Aussie Swiss continues to print a series of lower high and lower low on the hourly chart, and also inching downwards on last Friday below the 20-day and below the 50-day moving average as well, indicating that short-term bearish momentum remains intact, and also being depicted by this parallel descending trend line that is keeping the lower highs intact on the hourly RSI as well. So with that, I'll be using 57.70 as my short-term pivotal resistance on the Aussie Swiss FX cross pair. Intraday bearish bias, near-term support level to watch 57.05, followed by 56.70 level, all right, which is the minor swing low of 13th of September. Only a push up and an hourly close above 57.70 will invalidate the intraday bearish bias on the Aussie Swiss FX cross pair to potentially see a mean reversion rebound taking shape 57.95 next. Above it sees 58.20/58.40, which confluence with the 200-day moving average, I think, as a resistance level as well. All right, so that's a particular interesting technical configuration to watch, bearish bias on the intraday basis on the Aussie Swiss FX cross pair using 57.70 as my short-term pivotal resistance. All right, so with that, now let us turn our focus on the Hang Seng Index, or the Hong Kong 33. So the Hong Kong 33 continues to trade in a very tight range over here, awaiting for that potential key stimulus plan that's going to be announced on the first week of November. How do I know that? Because on last Friday, we do see that this China stimulus aims to boost consumption. Top China official said on last Friday during the sidelines of the IMF annual meeting. And he did mention that fiscal move will be quite large. So market participants now are kind of losing the patience. So they are looking to unveil this fiscal package in early November. So what is the date to look out for? Over here, if you go down over here, is 8th of November, because there's this National People's Congress Standing Committee, which will take place between 4th of November to 8th of November. All right, so that's why I explained to us the Hong Kong 33 going to trade very in a sideways, very tight sideways range configuration. But what's interesting over here is that the tight range configuration continues to print out a series of higher, lower, over here. Okay, a series of higher low. So with this series of higher low, right, anything in between, right, will consider be as a whipsaw. So for sure, the key support level will be still at 19,790/19445. We also correspond very closely to the rising 50-day moving average as well. But however, yes, we still maintain that intraday bullish bias, but this intraday bullish bias, right, is still trapped within this range here. But price action got to break out above that 20,850 level. All right, so if it doesn't break out above the 80,020 level, then it will be congestion within this range bound configuration. So only hourly close above 20,850 potentially will increase the odds of this bullish bias to at least see in near term for the next near term resistance to come in at 21,550. All right, however, a push down with hourly close below 19,445, then potentially that will start to see the extension of this ongoing multi-week corrective decline scenario that previously take shape from 8th of October to extend it on the downside to expose the next support level at 18,230. All right, so what you could see over here is that the hourly RSI also start to print out a higher low as well. All right, so with that, that sum up the intraday key levels to look out for. And the bias, yes, we still have a bullish bias, but this bullish bias will only increase unless we see an hourly close above 20,850 that has been preventing it from breaking out since 18th of October. Okay, so that's the key levels to look out for on the Hong Kong 33 index. So now very interesting will be the Japan 225. So on the Japan 225, we know that this is the big gap down over here, sell off. So this sell off was actually okay, due to this shock. Okay, 2%. Okay, close to 2% before erasing off the intraday sell-off losses, and managed to close positive right now at around 1.3% level based on our price action on the Japan 225 CFD index. So with that, last Friday, because of this mixed element, we have a neutral bias over here, a neutral bias on last Friday. But given this very positive V-shaped recovery that was seen right now on the intraday basis, and it also managed to break up above this dotted line over here, which is the the very short-term minor former descending trend line that was taken from the high of 15th of October, previously preventing it from breaking out on the 22nd of October and on last Friday as well. And today's Asia session, we see that V-shaped intraday push up with that positive technical element, as well as the RSI now managed to shape push up as well from the oversold region. With that, we will have a intraday bullish bias for today on the Japan 225. So flip to an intraday bullish bias today for the Japan 225. But right now we see a bit of a candlestick pattern, a hanging man, and right now a kind of a shooting star that is being formed on the hourly candle. right exactly at the next resistance level at 38.54 level. So there could be some form of hesitation, at least a minor pullback taking shape first in the first step. So this minor pullback first support will be at 38,320, maximum 38,090, which is our short-term pivotal support level for today, and also correspond to the pullback line of this former minor descending trend line from the high of 15th October now turns into a pullback support. And if we were to do the Fibo retracement, taking into account of today's intraday low all the way up to the current intraday high, it also corresponds very closely to the 50% Fibo retracement level as well. So using 38,090 level for a potential maximum pullback level to watch out for, and also the 50-day moving average. So as long as this pullback didn't surpass below 38,090 level, we will have an intraday bullish bias on the Japan 225 for today. Next resistance level to watch will be the 20-day moving average, I think as a resistance level as well, very similar level corresponding to this former minor swing low of 16th of October to 21st of October now turns to a pullback resistance at 38,890 next. However, if price action have an hourly close below 38.90, then today's intraday bullish bias will be invalidated for the price action to revert back to a very choppy price action movement to revisit today's intraday low at 37,350 slash 37,1110 level, which is the former minor swing high area of 5th of September all the way up to 13th of September, now turns into a pullback support at 37,1110. And if we do the Fibo retracement from the previous low of 6th of September all the way up to the previous high of 15th of October, that correspond to the golden ratio as well, okay, at 61.8%. Okay, so that's the intraday technical outlook on the Japan 225, where we flip to a bullish bias with a key pivotal support level at 38.90. But however, there could be a potential price action pullback first before the next bullish bias uplift resume to potentially revisit the next resistance level at 38,890. Okay, so that's for the latest intraday technical outlook on the Japan 225 for today. Now, turning our attention will be the European stock index. One of them will, which we focus on the German 30 or the German DAX. So for the German 30, what we could see over here is that price action managed to gap up into this Asia session, but can't break above the first resistance at 19,560, which we highlighted on last Friday. So price still remains pretty much supported throughout last Wednesday, holding above the 19,320 short-term pivotal support that we have since last week, and also the 20-day moving average acting as a similar support level as well. So still no change there, using 19,320 as my short-term pivotal support level. RSI continues to print a series of higher low, which is rather positive. So as long as 19,320 holds, we will still maintain our intraday bullish bias, but price action got to break out above 19,560 to gain traction to revisit the current all-time high area at 19,690 slash 19,755. All right. However, if price action starts to break down with an hourly close below 19,320, then with that, we will start to see a much more pronounced corrective decline scenario to revisit or expose the next near-term support level at 19,130. Below it sees 18,960, which is the minor swing low area of 4th of October and 8th of October, and corresponding with the rising 50-day moving average as well. So that's for the German 30. Turning our attention will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 remains lackluster. It continues to print a series of lower low before pushing up during today's Asia session over here. That is gap up. So with that, price action now managed to reject off the 20-day moving average on last Friday before shaping that lower low. So with that, I'll be using this 20-day moving average slightly higher at 42,720 level over here. Okay, which is so the former minor congestion area of 27th of September and 16th of October, just slightly higher above the 20-day moving average, which is at 42,580. So using 42,720 as my short-term pivotal resistance level, we will flip to an intraday bearish bias on the US Wall Street 30, a breakdown below last Friday, today's Asia session low. Okay, not today's, last Friday low at 42,085 exposes the next near-term support level at 41,885, which correspond to the rising 50-day moving average, and as well as the minor ascending channel support from the low of 5th of August over here. Okay, medium-term ascending channel support from the low of 5th of August. Only a hourly close and the clearance above 42,720, which is our short-term pivotal resistance for today, will invalidate today's intraday bearish bias on the US Wall Street 30 to see the return of the bullish impulsive up move for the next near-term resistance to come in at 40,060, then thereafter followed by 43,540 next. Okay, so that's for the US Wall Street 30. Now, turning our attention will be the Nasdaq 100. So Nasdaq 100 last Friday, we do have a bullish bias. It almost hit our resistance at 20,615 before selling off in the US session, then gapping up today again. All right. So with that, the price action on the US Nasdaq 100, the Nasdaq 100 seems to be evolving from the low of 1st of October, this purple line, the lower limit, and the upper line of the purple line over here, linking the higher high of 14th of October to last Friday minor swing high 25th of October. It seems to be trapped inside this bearish ascending triangle, a bearish ascending wedge configuration with the upper limit corresponding to the 20,615 level. So I'll be using the 20,615 level as my short-term pivotal resistance level, which is the upper limit of this bearish ascending minor wedge configuration, as my short-term pivotal resistance for today, flip to a intraday bearish bias for the Nasdaq 100 to see another visit down the 20-day moving average. That means first support level to watch 20,315. A breakdown below it sees the 20-day moving average coming in to act as a support level at 20,155 next, which also correspond to last Friday US session low as well. However, if price action, instead of going down to revisit the lower limit of this bearish ascending wedge minor range configuration, and you start to push up with an hourly close above 20,615, then today's intraday bearish bias will be invalidated on the Nasdaq 100 for it to push up to revisit the current all-time high area at 20,790 next. Right, so that's also sum up the intraday technical outlook on all the major stock indices. So now let us turn our attention with the focus on the commodities market, starting with gold XAU/USD. So for gold XAU/USD, last Friday we do have a bearish bias below 2,740 level. First support level to watch will be at 2,715. Price managed to survive at the 2,715. Can't break down during the European session. All right, the European session at around 6 p.m. Singapore time on last Friday, shaping a bullish hammer before inching back up and clear above the 2040 level during the US session. So what you could see over here is that potentially there's some form of bullish momentum coming back into play at the 2715 level. Can't break down below it. All right, so with that, we will flip back to a intraday bullish bias on the gold XAU/USD due to the positive price movement that was seen on last Friday over here by this bullish hammer configuration. So with that, as long as 2,715 holds for today, which is our short-term pivotal support level, we'll flip back to an intraday bullish bias on gold XAU/USD. First resistance level to watch will be the current all-time high area at 2,760/2,763 for today. All right, above it sees 2,774/2,782, which is defined by a Fibo extension cluster level. Only an hourly close and a breakdown below 2,715 short-term pivotal support for today that will invalidate today's intraday bullish bias to kickstart a minor corrective decline scenario or a minor corrective decline mean reversion decline scenario to expose the next near-term support level at 2,683/2,668, which is corresponding to the rising 20-day moving average as well. So that's for gold XAU/USD. Lastly, turning our attention will be West Texas crude oil. So for West Texas crude oil, this was the gap down. All right, price action on last Friday, it was positive, almost hit our first resistance level at 73.15 before that gap down in today's Asia session due to that news flow out from Israel at a very limited attack on Iran asset. then that causes the spike down in WTI crude oil price, West Texas oil. But where it spiked down, it managed to hold at our pivotal support level, which is at 68.70. So with that, due to current mixed element right now, we will have a neutrality stance between 70.55 and 68.70. Only an hourly close below 68.70 will validate a further potential bearish movement on the intraday basis for West Texas oil to open up scope for the next near-term support level to come in at 67.55/67.10. Below it, followed by 65.70 next, which is the minor swing low area of 11th of September. Okay, so that's for the technical outlook on and the key levels to watch. So having a neutrality stance first between 70.55 and 68.70 on West Texas crude oil. So with that, that's also sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a look at the calendar. What are the key events to look out for today? So for today, Monday, will be a rather quiet day in terms of economic data release. Nothing to look out for today as well. Okay, in terms of, yeah, unless we have, you're looking at more on the Canada dollar, we do have BOC, Bank of Canada officials, McClellan speaking at 5:30 p.m. Singapore time. Right, so it's a rather quiet session for today in terms of economic calendar release. So in terms of the earnings calendar, I'll share with you why this week is important, because in terms of especially on the major US indices, primarily focusing on the NASDAQ 100, is the release of 5 mega cap technology stocks earnings release. So on Tuesday, after the close of the US session, 29 October, we have the results of Alphabet, which is Google. Then on Wednesday, at the close of the US session, 30th, we have Microsoft and Meta. And as well as on Thursday, at the close, we have Apple and Amazon, 31st. So it's a very, very big week in terms of earnings release for the 5 mega cap technology stocks that could potentially impact this volatile two-way movement that could unfold on the NASDAQ 100. So I will actually uncover this as the days goes by in this week's Daily Dose. All right, so with that, that sum up today's Daily Dose of Market Insights. Kelvin here, signing off. Wishing you all a great day ahead, and we shall speak again tomorrow. Thank you.